Hello, everyone. Hello, good afternoon or good morning, depending on where you are. This is Mohamed Yaoud, and I'm the Chief Markets Analyst at PU Prime. Today, we're going to have a look on the markets as usual. Today is a Monday, the beginning of a new starting week. So, of course, it's time for our weekly analysis. Thank you very much for tuning in, everyone. I hope that the video and the sound is all right. Please just confirm in the comment section below. And we're going to have a look at the markets. First of all, of course, we start by having a look on the economic agenda, where we know what we are expecting during this week. And let me tell you, the previous week, we said that it was a light week. We didn't have much things to look for on the economic agenda. It was somehow a light agenda for the previous week. However, things will start to get a little bit tough for this week and, of course, the next one. So we have a couple of central bank meetings that we will be discussing shortly. And, of course, some very important data coming from the US, which is the NFB report to be announced at the end of this week. So things are supposed to be getting a little bit, tough during this week. However, it is my job, and that's why I'm here to make everything simple for you. So let's start with quickly discussing what happened in OPEC meeting. Yesterday was the meeting basically for OPEC. And as we agreed the previous week, that OPEC is the organization of the petroleum exporting companies, and they basically somehow control, or they don't 100% control, but they influence oil prices in a way or another, because they basically they assist, the overall global production and exportation of oil. So basically, they agreed that they will be continuing the same current policy, which is cutting the oil production by a daily 2.2 million barrels. However, they will start gradually increasing the production, and they basically set up like a timetable or a schedule where they will be increasing oil production gradually, starting from September of this till September of the following year, 2025. So they basically changed their policy in a manner. However, markets are not pricing this because we are in a current state in the markets where nothing could be taken as a forward guidance whatsoever, whether it's from the Federal Reserve, the European Central Bank, or whatsoever. We are at times in the market when uncertainty is really high. What could happen to inflation? What could happen to geopolitical tensions and a lot of other matters? So it doesn't really say that, okay, if OPEC had a timetable to increase production, will they basically follow it, or they will just, maybe scale back on this plan later during this year or at the beginning of the next year? And that's why basically markets didn't react that much. Going forward and starting today with Monday, the 3rd of June, I think right now the economic agenda is clear as day. We had some data coming from the Chinese economy early during today's Asian session, and it's basically the manufacturing PMI, which is the Purchasing Managers Index. And surprisingly, it showed better than expected results, even better than the forecasts. So the previous reading was 51.4. Expectations were a little bit bullish, 51.6. It even came higher than the expectations. And today, let me tell you that it's the PMI day. So the Purchasing Managers Index is an indicator which is announced not only from one country, but as we said, economic indicators are roughly all the same, and they are announced from countries. So the PMI as an indicator will be announced from the US, and it will be also announced from the Great Britain today. And it has also been announced from the Eurozone. So as I said, it's the PMI day. It also was announced from China. So China beat expectations when it comes to the manufacturing PMI. The euro basically, no, it failed expectations, and it even came lower than the previous reading. And we are looking forward after 20 minutes. Are you seeing what I'm seeing here? Yeah, so that's for the Eurozone. It came lower than the expectations and lower than the previous reading. And after 20 minutes, we will be looking for the pound PMI. And moving forward, we will be having also the USD, or the US numbers when it comes to the PMI. And I don't want you to get confused because if you check the economic agenda, I use it on investing.com. You will see or you will notice something. Here it says the S&P Global US Manufacturing PMI. Okay, that's for May. And after this, with 15 minutes, you will have another manufacturing PMI again for May, but this time it's from the ISM. It's pretty much the same indicator. However, it's announced by two different entities. Like, the NFB, for example, and we'll be discussing this shortly. The NFB is announced basically by the government, which is the Bureau of Labor Statistics. However, the ADP NFB, which is announced 2 days before the actual NFB, is just, a survey, let's say. It's a kind of a survey that some companies or some organizations try to predict what will happen with the NFB. And we will see this today, I think, on Wednesday, it should be here. Yeah, that's the one I'm talking about, which is the ADP non-farm. Where is it? Yeah, ADP non-farm employment change. Don't get confused because this is not the actual NFB, but this is always announced on Wednesday, just 48 hours before the actual NFB data. So when you focus on the numbers, you should know which one you should follow, which one is the actual numbers from the government or the governmental, organization or authority, and which one is just a survey by some companies or some associations or whatsoever. So that's for now. That's for today. I mean, that's for the manufacturing PMI. We got the data from China. We got it from the Eurozone. We will get it shortly from the pound or the UK, and we'll also have it from the US later during the day. Moving forward to Tuesday, I think Tuesday is the least important day when it comes to the data or the economic agenda here. You can see pretty much nothing. We only have a comment from the ECB member, Fernandez, and this is 100% to be neglected because the ECB meeting will just follow this by literally 48 hours. So the comment, he will not say anything new, in my humble opinion. We have the German unemployment rate, like let's say 2 or 3 out of 10 when it comes to the importance, and nothing else. We have the job openings from the US, and normally the job openings is important, but I think markets will not 100% react to the job openings this week, as focus will be more on the NFB. So yeah, let's say on Tuesday, 4th of June, we have nothing to look for except the job openings for the month of April, and that's from the US economy. Moving forward, things will start to get a little bit exciting, starting on Wednesday, the 5th. Why is that? We also have some PMI numbers from the Eurozone, the services, the composites. I think today was only the manufacturing, right? Yeah, so today was the manufacturing PMI from the Euro, okay? And the remaining, because the PMI has more than one type. So the manufacturing was announced today, and on Wednesday we will be having the services PMI and the composite PMI, because any economy doesn't have any one sector. Like you have the manufacturing, you have the services, you have both, you have the construction, and so on and so forth. So if you want to measure the purchasing index or the purchasing, or somehow you want to measure the activity, economic activity in any given sector, you must know that there are multiple sectors. You cannot just put all of those in one basket. You will have to look at each indicator separately. But however, that being said, the manufacturing PMI is 100% the most important of all, because, in any economy, the manufacturing comes first. So on Wednesday, so far, nothing quite important. Services and composite PMI from the Eurozone. We also have the composite and the services PMI from Great Britain. We have the ADP non-farm employment change. We have just mentioned that. Yes, it is important. No, it doesn't move the market so much because it's a survey. And I think I can show you this. Yeah, exactly. So the ADP National Employment Report is a measure of the monthly change in non-farm private employment. Okay. It You can see here it says the release 2 days ahead of government data is good predictor of the government's non-farm payroll. So it's not the actual, it's just a prediction. So ADP, I think I've researched this once. It's a company like an HR company which provides outsourcing HR companies and so on. It's a major company. So they somehow have a lot of data that they try to research and to know whether people are getting employed or not, how about the wages and so on. So they try to predict the governmental numbers. Are they accurate? I don't believe so. I've watched this for a long time now, and let me tell you guys, if this ADP non-farm employment is bullish, doesn't really matter at all that the numbers will be bullish from the government. It might turn out bearish, it might turn out bullish, has no any sort of correlation in my opinion. So don't give this more importance than it deserves. We just look at the number and that's all. We go on with our day. Um, Moving forward, we also have the composite PMI. Yeah, and now we are starting to see some central banks. We will be having the interest rate decision from the Bank of Canada. So the Bank of Canada is basically expected to cut from 5% to 4.75%. So it might be the first interest rate cut by the Bank of Canada that we will be seeing during this week. Will it affect the Canadian dollar that much? I don't really believe, because at the end, the Canadian dollar is dominated by the US dollar. However, we would like to see any forward guidance or any hints from the Bank of Canada about the next upcoming meetings. What will they do? Maybe they will be so hawkish that they will be able to support the Bank of Canada, or on the other side, which is more expected, they will be maybe so dovish, they will be affecting the Canadian dollar negatively. So that's the major thing to look for on Wednesday, which is the Bank of Canada meeting. And of course, the press conference. We have the crude oil inventories weekly figure. We have been talking about this for some time. And on Thursday comes the major event, or let's say the second major event for this week, which is the meeting for ECB, European Central Bank, to decide on interest rates. Okay, quickly, someone is facing network issues. Please just, guys, confirm it's from your end, not from my end. So if the video and audio is working fine, please just confirm in the comment section below. And I think it's an individual issue. Okay, that's great. It's fine. So the ECB, what will happen in the ECB meeting? Most of the comments, most of the expectations during last week were basically tilted towards a rate cut. Okay, all of the people were seeing a rate cut by the ECB. However, after the previous CPI report from the European zone, it basically showed that inflation is still sticky. It's not going down as expected. So we can basically see one of two things during this meeting. Yeah, the bigger probability is that they will cut interest rates from 4% to 3.75%. That's the bigger probability. And we might see a surprise and fixing interest rates at the current level of 4%. It's a smaller probability. However, if you want to trade the markets with news, you must always have an idea of how could things go the other way around. So right now I'm telling you, yes, expectations are a cut of 25 basis points. However, they might, with a small probability, they might just decide to delay this rate cut for another or for the next meeting. How will this affect the euro? To be honest, no one could tell you. No one could tell you, because right now, the euro is not only affected by what will happen in this meeting, it's affected by something that we call as the forward guidance. Okay, the Federal Reserve, for example, most probably is looking for one rate cut during this year. we have many meetings left. I think we still have like 4 or 5 meetings for this year. However, because the Federal Reserve is so clear to markets, markets already know that, okay, even if we have 4 or 5 meetings, most probably they will cut interest rates once. When it happens and how it happens, those are small details, but at least we're looking for one interest rate cut from the Federal Reserve, because with comments from the FOMC members, comments from Jerome Powell in the press conference and everything, they know how to give forward guidance to markets. When it comes to the ECB, we literally have no clue. If they didn't cut interest rates for this meeting, will it be next meeting? Who knows? If they cut interest rates during this meeting, will this be the start of the easing policy? Will more rate cuts follow, or it will only be one time for now? What will happen? Will they provide the forward guidance or not? I mean, they can cut interest rates and the euro will go up. Okay. They can cut interest rates, euro will go down. So it depends on the press conference. It depends on the tone for the next coming period. I mean, once the decision is announced, even if they cut interest rates from 4 to 3.75, I don't believe markets will react at that specific time. I think markets will wait for this one. I'm sorry, we were looking at the deposit facility rate. It's 4.50. They are supposed to cut to 4.25. Markets will be waiting for the ECB President Lagarde speaks. That's the press conference, right? Yeah, no, this is the ECB press conference. Or she will speak twice on the same day. So she will be having the ECB press conference at 4:45, which is, I think it comes like 30 minutes after the decision. And she will be having another speech, but this will be, unimportant, because if she has anything important to say, and of course she will, it will be said during the ECB press conference, where we can see that news online during that exact hour on the ECB website. So if you go to Google, I think this will not be available here, but ecb.com, is it? Because I zoomed in the share screen, so this will not be available to you, but I'll be sending you a link in the comments section, okay? But there is an official website by the ECB where they have, even on YouTube, if at that exact time, which is for the ECB press conference, you look for the live stream, you will have it on YouTube. So yeah, that's pretty much what we'll be looking at for Thursday. And yeah, we also have where was it? Initial jobless claims. This one, which is again the weekly figure, just have an idea how things are going. Moving forward to Friday, the last day of the week and the most important one. Nothing so far looks interesting. Nothing. Here comes the bomb. The NFP, or the non-farm payrolls. Okay. We also have the unemployment rate. We have the wages, the hourly earnings. We have the participation rate. We have tons of data to be announced, all at 4:30 Dubai time. Okay. What will happen to those numbers? Expectations, are to increase a little bit. Let's wait and see. Do you trade NFP? If someone would ask me, do I trade NFP? I definitely don't. I don't touch the chart with a 10-foot pole on the NFP day. I just watch, especially that it comes on Friday, and markets are a few hours away from closing. So why would I do this? Why would I enter a position not 100% sure of where things will go, and then I'll have, if things go south and I'm in a loss but didn't yet, hit my stop loss, I will have to leave this trade open during the week, and God knows what happens during the weekend when it comes to geopolitical tensions, when it comes to comments here and there. So how things will open next week, I will not put myself in this kind of risk whatsoever. I watch the NFB, I wait for the day to close, I see what happened. I study price action. I study the numbers. When the markets open on Monday, I start to trade with peace. That's what I advise you to do. Again, ECB President Lagarde will speak on Friday, and that's pretty much it that we will be having. I think we took a lot of time today discussing the economic agenda. Of course, it deserves this because it's quite a heavy week. And let's start having a look on the technical analysis. Can we put a buy stop or a sell stop? You can. Technically, you can. And it will be the fastest way to lose your money based on experience. I've done this tons of times. Buy stop, sell stop, price activates or fills both, and you are losing money on both positions. And yeah, you can do this because our execution is good. I mean, at P prime, but at the end, you are not sure where markets will go. You will not be losing from slippage because we will give you the best, execution price. But if both gets executed and you're left nowhere, even if you didn't make money, I think you haven't. Even if you didn't lose money, I think you haven't made money. So just leave it, Uh, and that's what I advise you to do. Having a look on the dollar index here. Of course, we do our analysis with the weekly. We start with the weekly, and the weekly looks terrible. Today, I'm in the mood to zoom in the chart so much so we can understand what's happening on the weekly. So the previous week, let's talk about this candle, the 20th of May. I think I will need to remove my crosshair. It's getting in the way. Is it? Yeah, this is much better. So this candle was basically what we call as an inside bar. And we mentioned this during the last week. An inside bar is where the weekly range is contained within the previous week. So we didn't exceed the high, we didn't exceed the low. And that was a very bad week. The following week, which was the last one, was even more terrible because we didn't do anything. Pretty much the body is really low, simple, small, but we had a new higher high and we had a new lower low. So markets are going nowhere. We are in a sideways range, but we are in a converging sideways range. Prices are moving in a bigger range. So far today is Monday, nothing, not a new lower low, not a new lower higher high, nothing. We are just doing nothing. So for now, I want you to focus on the highs and the lows of the previous week. Why is that? Because when markets are undecisive, the dollar has been trading so far for the last 2 weeks in a sideways range. Okay, this week and this week, 2 weeks sideways. And that's the high and the low of the sideways range. I don't want it to be so naive, but yes, if prices break higher, we will continue higher. If prices break lower, we will continue lower. During those ranges, on the weekly at least, we definitely have no bias. Will the price go higher to test the high? Will it go lower to test the low? Anything could happen, so the weekly is not really helping. Let's have a look on the daily. Okay, now things are starting to get a little bit more clear. Why? Um, have we broken this one? Where is it? Yeah, this one. Yeah, we haven't broken. I don't usually work with trend lines, but it's interesting to look at it here. Okay, so on the daily time frame, we had two highs. That's high number one, retraced. Number two, we broke below, retested the previous support. So now this is a confirmed double top pattern. We went lower, retraced for 1, 2, 3. So this is clearly a retracement, right? So we were moving lower, we are retracing. Does this mean that we will finish this retracement and continue lower? So far, maybe, maybe not. but the daily is in a downtrend, okay? Let's zoom in a little bit here. We clearly have resistance somewhere around here, right? Because this was one. It's even right here. Yeah, because it was support, broke below, resistance once, resistance second or twice, false break, and we are heading back again. And we clearly have some sort of support here. That's for the daily. So again, the weekly is not giving bias on a wide range. The daily is not giving bias, but it's a little bit smaller range, right? What's happening on the 4 hours? We don't need this. We just need to highlight it's 150.10, 105.10, sorry. And for the support, it's 104.40. Is it 104.50? No, it's 104.40. 10 pips is a lot on the dollar index. Okay, so it is 100% clear sideways range. We had bottom here or a low here, two highs and two lows. So we are just swinging here in a sideways range. So by saying this, for now, what was the last thing the dollar did? The last thing was basically tap into support, had great rejection candle here, and we are starting to head higher. So the weekly is a sideways and gives no bias. The daily is a sideways and gives no bias. On the 4 hours is a sideways, but at least we have some upward move that we are expecting on the smaller time frame. It's not really a small time frame because it's a 4 hour time frame. So on the 4 hour, let's go to the 1 hour right now. That's the 1 hour. Okay. What does the market structure say? We headed lower, higher, lower low. This was a high, which is lower than the previous one. So far things were going good to the downside. Then we had this higher low. So this is a clear rejection of this support. We are now even trying to have a higher high. So I'm basically looking to go up. However, there are no conditions. I was just going to say that we must break above this. So far, it appears that we are already breaking. So 104.70, is it? Uh, 104.60, 104.65. Yeah, somewhere around here. We have some sort of resistance. We broke above. Maybe you can retest. And we will be having our targets on the dollar 104.88. Let's say 104.90. Yep, exactly. And then we will be having the 105.10. It's a sideways range. It's a good move that we are expecting to the upside. However, just because it's a sideways range, even if you want to take this trade, please make sure that your risk is kept to the minimum because at the end, it's a sideways range. So a sideways can literally do anything. So instead of doing this, maybe you can go halfway and then break to the downside. So it's not a sideways, it's not a trendy market that you can follow blindly. You can follow trade within the sideways range, but please make sure that you don't over risk because eventually it will break out either to the upside or to the downside. Don't forget on the daily, this might be a correction and we might end up going lower. So a buy on a general trend, which is a downtrend, is risky. So just keep this in mind. Okay. That's great. That's great. Here's the weekly, what I'm doing. Here's the daily. Okay. That's great. Having a look on the euro, I don't think we should spend more time on the euro because it will be most probably like the dollar. Hey, here is the weekly. What does the weekly say? Nothing. Exactly like the dollar, higher high and a lower low. Prices are just moving like this, you know. and it's in a sideways range. And the last 2 weeks is already within the previous weeks or the third last week, range. So pretty much boring price action on the weekly, doesn't really give a bias. On the daily, it's like the dollar on the opposite side. So that was a move higher, retracement, higher, retracement. Will it continue higher? Most probably that's the nearest scenario. And I think this correction will end to the upside, but will it end now or not? Let's see the 4-hour time frame. Again, we have support. Again, we have resistance somewhere around here. So the support is 1.0800, right? Maybe somewhere around here, a false break. And the resistance 10880, 1.0880. Okay. Again, nothing pretty much to say. Highs just around the same level, lows just around the same level. We are in this is what we call as a ping pong trade. The ping pong, you send the ball, it comes back to you, and so on. So this is the ping pong trade. Will we be going lower to the levels of support 0.08, 1.08? I think that's the higher probable scenario that we would be seeing. On the 1-hour time frame, again, we are having a lower high, and now that we have broken this level, we are having a lower low, so we might be heading lower for 1.08, which is around 40 pips. I would love to see during this week, during this day. It's only for today. And by the way, Europe or the London session just started around 1 hour ago, and they are selling so far. It's a huge candle to the downside. So yes, we might be selling the euro, buying the dollar, at least for 2 sessions. And it's a weekly analysis, guys. So if you forget what we say, you can always get, by the way, this session is always uploaded to the YouTube, which is PU Prime's channel. I never knew this. I just found this like the previous week, which is a great job done by our team, our social media team. So during the week, okay, today we are expecting moving higher, maybe on the dollar, lower on the euro. If during the week you forget the analysis, we already talked about the weekly, the daily, and the probable scenarios. You can definitely get back to that recording, get back to our analysis and move forward with the week. On the weekly time frame, on the pound is a little bit better. Why is that? We were moving higher on the weekly time frame. That was a great bullish candle. That was another bullish candle, not so great. That was another bullish candle, which is bad. So this is how we lose momentum. And right now, the pound is moving lower. As we agree, the pound is somehow a couple steps ahead of the euro. So if the pound is moving lower and already has more clearer picture, I believe the euro will follow to the downside. And on the daily time frame, it's great. We have support, and we might have here a head and shoulders pattern on the 4-hour. Exactly, yeah, brilliant. So we were moving higher. We had the left shoulder, we had the head, right shoulder. It's not yet confirmed because the head and shoulders pattern is confirmed once we break below the neckline. Here, the neckline is 1.27, which is also a psychological level because it's a round number. So I'll be looking for a short on the pound dollar during this week after we break below the 1.27. And the targets would be, which is from the head. Here I can see this is a possible level of interest. And if we check Fibonacci, It's the 61.80%. So here we can see that the head and shoulders pattern, we are moving lower. 61.80% correction is what we can see during the day. What's going on the dollar versus the Japanese yen? Starting off with the weekly time frame. We are again losing momentum here. Let's remove this. So that was a great bullish candle. We lost momentum. We are already near the levels of interference by the Bank of Japan. So something that we need to watch during this week. Overall, on the dollar versus the Japanese, it seems like we are bearish on the weekly. What's happening on the daily? A great engulfing candle here. We formed resistance. We have support here. So we have a very tight sideways range, but it's a good one. This is what I'm talking about. That's support. That was the engulfing candle. Again, potential head and shoulders. And that's what I'm looking at Japanese. It's a sideways range, but it's clear that this sideways range is a little bit bearish. Why is that? Because we had a low here and another low formed here. That was a high. If this was a clear sideways range, we should have targeted the previous resistance, the previous highs. However, because there is selling pressure, we didn't, and we are heading back for support. So even the dollar yen looks bearish, and we are targeting the levels of 156.60 during, let's say during today. I think we can reach there today. A break below, of course, is bearish on the whole week on the dollar Japanese. We have a question on gold. I'll have to wrap this up quickly because we have another session starting in 20 minutes. So I'll finish up with gold, US oil, and then the Dow Jones. If you have any questions other than that, please leave it in the comments section. Gold on the weekly is bearish. That was a clear bearish candle. And remember when we talked about the false breakout, that was a false breakout of this previous level. So we will be targeting the levels of 2300. I think this is on the weekly time frame. This is the nearest support, 2308. So yeah, we are expecting a move lower on gold, but it's not a big move because that was a great move to lower. That was a retracement. Now we are moving lower, but the momentum is weak to the downside. It's dying. No momentum. So in this case, I wouldn't really suggest that you sell gold. Okay. I would either look for buys or wait for price near the closest support, because you can see the support, how well it supported prices. You know, I mean, prices just climbed here around $64. That was a great move. So this is a support. I think that we will be moving closer to slowly. Once we touch, I think we will be heading higher during the week. So keep your eyes on 2305. Oil is doing nothing, and I'm just fed up with oil because we have been talking about this support for some time now. We touched once, two, three, and now we are around the fourth touch. we are not heading higher. We are not rejecting support, because if we are rejecting support, we only created one higher high. I was bullish. I thought, okay, finally we are having a higher high and we'll continue moving higher, but we are back again to the same level. So basically, I will wait. No data issue. Oh, the oil is not working here on Trading View. Okay. So that was a network issue from my end. So I'm still bullish on the US oil, slightly bullish. However, I would really like to see confirming or confirmation price action from around the support levels here. So the confirmation or the price action I'll be looking for is a break of structure. So it's lower lows and lower highs. I would love to see a higher low and a higher high before going higher, before putting my money again on the US oil. Let's end this session here with the Dow Jones, a brilliant move to the upside, supported by the PCE numbers that were announced on last Friday. And there is nothing much to say. Nothing much. That is a clear rejection on the weekly time frame. On the daily, that was losing momentum to the downside. We had a great bullish candle here. I think there's nothing that we can say on the Dow Jones other than we are heading higher to test the closest resistance, 39,150. But is it from here? No. We will be waiting for, so that's our target on the 1 time. Of course, we will be heading lower for a retracement, and then we can buy the Dow Jones. Where will the retracement end? A good question. Of course, we will be having a look on Fibonacci. Slight price action happened here. You see this great bearish candle. This is definitely something, it's not a resistance because prices basically were on the way down, but there are some selling pressures here. This single candle on the 30 minutes time frame, it was 300 points. So when on the way down, this might be support and we might be heading higher. Anyway, the Dow Jones is good for buys during the week, but we will need to watch it and keep an eye. I think we are done. I think we have pretty much covered everything. Anyone with network issue got signed out? No, I think, guys, you somehow freak me out with when you have a network issue. I think it's from my end, but apparently, no, everything is fine from my end. So, yeah, it's an individual issue. Thank you, Ron. Thank you, Hilaluddin. Nice name, by the way. Thank you, guys, for attending today's session. And if anyone here is from the Arabic region, we are running a daily live analysis on our YouTube channel for the Arabic or for the MENA region. And this will be a daily live session, but of course it will be in an Arabic language. That's on YouTube. I'll be starting there in 10 minutes. So if you are someone who speaks Arabic and you want to listen to me speak Arabic, or if you want to follow up on the analysis, because that's something I'll be doing daily, not only weekly, but a daily live session. This will be on the Arabic channel on PU Prime. Just type PU Prime Arabic on YouTube and you will have it. See you there if anyone will come. See you there in 10 minutes. I'll just have, some water. My name is Arabic, but I speak Persian. Okay. Nice to see you guys and nice to meet you all. And it's always a pleasure to have you all around here on Mondays. So thank you very much for watching this, and we'll meet again during next week. And if you have any questions, please reach out to us on social media, and I'll be more than happy to help. Take care of your trades, trade safe, and stay safe. Thank you very much. Goodbye.